It seems that every week a new smart money strategy pops up with some new trend lines, liquidity sweeps, Fibonacci tweaks, you name it. And let's be real, it can get overwhelming fast. But what if you had a toolkit that could cut through this noise, giving you the most critical concepts in a powerful way? Well, that's exactly why we built the Smart Money Toolkit. It's not just another trading tool, it's your all-in-one system for decoding smart money concepts in real time. And by the end of this video, you'll see exactly how it works and why traders at every level are making it a must-have. Understanding market behavior is crucial for any trader. Whether you're just starting or have years of experience, markets move in patterns, influenced by large institutional traders who operate based on liquidity, momentum shifts, and key levels. Without a proper system to analyze these factors, it's easy to misinterpret market moves and fall into common trading traps. That's why having a powerful toolkit that simplifies these complexities into easy-to-read data can make all the difference in your trading success. Let's dive in. At its core, trading is all about where smart money are pushing the price. No matter the strategy, volume footprint analysis, TPO charts, or any other method for that matter, smart money concepts are the common thread that ties everything together. Yet mastering it can feel elusive. That's where the SMRT Algo Smart Money Toolkit comes in. It takes complex market dynamics and simplifies them into clear, actionable insights. And to do this, we start with market structure. Market structure is the backbone of smart money trading. It tells you where the market is headed next. An uptrend consists of higher highs and higher lows, while a downtrend forms lower highs and lower lows. But what happens when a higher low breaks in an uptrend? That's called a change of character, a signal that momentum might be shifting. A bullish change of character is formed when a low occurs, followed by a lower high, then a lower low, and finally, a higher high that breaks the previous lower high. And a bearish change of character is formed when a high occurs, followed by a higher low, then a higher high, and finally, a lower low. But then, there's a change of character plus. A bullish one is formed when a low occurs, followed by a lower high, then a failed lower low, and finally, a higher high that breaks the previous lower high. And a bearish one is formed when a high occurs, followed by a higher low, then a failed higher high, and finally, a lower low that breaks the previous higher low. Now you know how to spot change of character, but you may be asking what it's useful for. It's useful for exactly this. A change of character is excellent as a confirmation for entering trades. For example, when you see a retest, a bullish change of character will ensure the price will go in your favor. But what if price creates a high, then a higher low, and then breaks the high? That's a bullish break of structure, signaling this trend is going to continue. A bearish break of structure is created when a low occurs, then a lower high, and then a low that breaks the previous low. Our toolkit automatically detects these market shifts and continuations, and even separates internal from swing structure. A swing structure is plotted by a solid line and represents the biggest and most crucial market shifts. Meanwhile, the internal structure is plotted by a dashed line and focuses on the smaller shifts inside the swing structure. But often, market structure can be confusing. A change of character here, break of structure there, and the price still goes the wrong direction. That's why we added the option of dynamic market structure, which filters out false signals. Manual market structure looks like this. The indicator plots these by the book, how it should be. It looks kind of messy, right? And this is how dynamic market structure looks. All fake signals are filtered out, and left are only the ones that actually make sense. The toolkit also automatically colors candles based on bullish or bearish market structure. When a bullish change of character forms, the indicator automatically colors all candles blue, and when a bearish change of character forms, the candle switches to red, so you can quickly identify short-term trends with ease. Now it's time to tackle the next crucial concept: support and resistance levels. These are key price zones where price is expected to react, making them essential for traders when setting stop losses or identifying target areas. Nearly every trader uses this concept in some form, with the most common approach being key swing points as reference levels. But we decided to take a different approach based on our research. The most effective and widely used method for detecting support and resistance levels is through order blocks. These are zones where market orders accumulate before a significant move, acting as hot spots of institutional activity. However, we didn't stop at just regular order blocks. We added volumetric info, giving you an insight into the buying and selling pressure, so you can quickly determine how strong a level really is. For example, when you see price tapping into a bullish order block that has more buyers than sellers, it's a perfect opportunity to take a long position. However, if a bullish order block has more sellers, it's more likely that the order block will get mitigated in the future. We've also separated swing order blocks, which are formed on the most key swing levels. This way, you can separate normal order blocks from the most crucial ones with ease. Next, a concept that can't be missing are fair value gaps. These often occur as price moves toward or away from liquidity areas, creating gaps where supply and demand becomes unevenly distributed. These imbalances in the market will need to be corrected, and as such, they can act like magnets pulling price back to fill these voids. So recognizing the importance of imbalances, we added a multi-time frame feature, so you can easily check fair value gaps that forms on higher time frames. As mentioned earlier, these zones act as magnets, making them ideal levels to set targets or to place your stop loss. If you want to use them as entry levels, it's best to wait for a reaction of the price to these levels before executing a trade. And as everybody knows, higher time frames rule the smaller ones. So if you are on a 1-hour chart and select the 4-hour fair value gaps, these FVGs will have a better chance to play out and not get mitigated. Many of these trades will take place between surplus and deficit zones. To effectively navigate through these zones, you'll need a way to spot these areas. That's where the high and low feature comes in. It helps you quickly determine if the price is at a premium or discount zone, so you can quickly see if a price is at a good level for an entry. It also shows you if the current high or low is strong or weak. This will help you spot breakouts with ease. When you see that the current high is weak, there is a high probability the price will break out of this level in near future. On the other side, if the current low is strong, the likelihood of price retesting this level and not breaking out is very high. Have you ever noticed the price shoot through a key level and then immediately reverse into the opposite direction? These are called liquidity sweeps. Our toolkit automatically highlights them, making it much easier to spot where big players are pushing the price. These often occur at key support or resistance levels, where there are sitting unfilled orders. That's why a price could be in a bullish trend and test a resistance level, and as price reaches this level, these huge unfilled short orders get filled and rapidly push the price into the opposite direction. Many traders think liquidity sweeps are traps set by banks and institutions, but in reality, they are great entry opportunities. For example, when you see price sweep a key resistance level and then form a bearish change of character, this is the perfect time to take a short entry. Now that we understand liquidity sweeps, it's time to tackle equal highs and lows. These often indicate a market reversal, but these are not used as entry or exit points. Instead, they are solely used as indication that the market could be reversing, and many traders wait for confirmations, such as a bearish change of character, before executing their entry. Equal highs indicate that the bullish trend is losing momentum and the market could reverse into the downside, and equal lows indicate that the bearish trend is losing momentum and the market could reverse into an upside. So next time you'll see a massive bullish trend and think the asset will go even higher, think twice and toggle this feature on, and you'll be able to catch an awesome reversal before everybody else. Next game-changing feature is accumulation and distribution. These areas show you how smart money accumulates and distributes their positions. These often occur in ranging markets, where neither buyers or sellers can reverse the trend into their direction, and these areas will help you spot in which direction the price is likely to go. Another key feature is the multi-time frame dashboard. This dashboard simply shows you the trend on 15-minute, 30-minute, 1 hour, 4 hours, and 1-day time frames, helping you quickly determine if it's the right time to look for long opportunities or short opportunities in the market. Many traders get stopped out because they ignore higher time frames. But with this dashboard and multi-time frame fair value gaps, you can quickly determine where the price is likely to go. We all know that trading is all about timing. That's why you can create alerts on every feature within the Smart Money Toolkit. Simply head to the Alert section on TradingView and create an alert for a concept that's crucial for your strategy. Now you know that the Smart Money Toolkit isn't just a set of useless features, but a complete trading system that's designed to help you trade more efficiently. From identifying market structure and order blocks to highlighting fair value gaps and liquidity, everything is designed to give you a comprehensive view of the market. You can access this toolkit directly on our website, smartalgo.com. You'll also get access to other premium features, such as our Pro V3 indicator, which we believe is the best buy and sell indicator on the market. It also provides you with supply and demand, dynamic support and resistance, moving averages, automatic take profits, and so much more. You'll also get access to revolutionary MACD indicator, trend pivot oscillator, and much more. We hope you enjoyed this video and learned something new. Thank you for watching, and until next time.